Well, thank you for joining us on Who Moved the Market. I'm Surabhi Upadhyay, and today we'll be asking whether institutional investors will continue to say, Paytm karo. Yes, you guessed it. Paytm is the stock and the story in focus, and I have with me two of my friends and colleagues who've been really looking at the headlines, the news flow, and all that's happening behind the scenes with this company. Guys, thanks very much for joining in. Nisha, you've been working the phone since the morning to figure out to the institutional shareholders, basically part of the Alibaba group. They had sold off stake in the market, around 3% stake. Since then, there's a lot of speculation whether more stake will be sold. Will SoftBank sell? Will Alibaba sell more? And then suddenly there was this buzz about potential talks with the Bharti group. So Nisha, you set the record straight on this one, because at the face of it, this would excite a lot of people. And I mean, the stock's still up about 2-3% today. But your sources are saying no deal with Bharti, at least as of now?
So right now, as we gather from sources with direct knowledge, and Surabhi, this speculation has been the talk of the town, of the deal street, whole of this weekend. So I made several calls, spoke to a lot of my sources, and the sense that we are getting is that Bharti did show an interest, and from the group level. And then after an exploratory chat, they did not get the right kind of deal structure and the right approach from Paytm, and therefore the deal talks collapsed. So I wouldn't say that the deal was even being negotiated or at any stage. It was just explored by Bharti Group as one of the thoughts that will you be selling stake in Paytm and not just Payments Bank. Bharti Group, as we gather from sources, is looking at Paytm parent company on the whole, and
the listed
entity and not just the Payments Bank business. Now, though the commonality between the two groups, Bharti Group as well as Paytm, is in the Payments Bank business. So that was an obvious speculation by people. But what I do gather is that Bharti Group was exploring, if at all, Paytm is looking at selling stake at the parent level. And also remember, as you mentioned, what is going to happen, what is the exit route for the investors who have large chunks of stake.
But Nisha, wait, hang on. Let me take a step even further. I know you are the veteran in terms of this Paytm and all the deals happening. But explain to people why, first of all, SoftBank and Alibaba are looking to pare down stake. You know, first glance, it seems like, okay, I mean, the lock-in is over. Do they want to exit? Because we know about the whole losses story with Paytm. But just the standpoint of these two large shareholders first.
So I won't be able to comment without their comment on our story on what their strategy for India and Paytm is going to be. But Alibaba, of which Ant Group is the affiliate company. So Alibaba exited its position in Paytm earlier this year completely. And it is also said that there are two reasons for it. One, the political aspect. There has been a lot of hue and cry about some of the foreign investors in India. And on the other hand, the entire tech digital space is not looking good globally, and every investor is trying to manage their balance sheet from mark-to-market losses perspective and trying to keep as much cash as possible. So from those two important points, Paytm has seen a huge amount of sell down at the IPO time, and from then they have tried to recover a lot bit. They have tried to change the narrative. So it really depends on how much gumption do these investors have on staying on while they are looking at a more difficult period at the moment of an impending slowdown, and especially digital and tech has taken a large part of brunt of it in terms of valuations globally.
So as of the December shareholding, I've just pulled up the inputs from the exchanges. A&T Financial holds just under 25%, 24.8%. Then, some of the SAF funds, SAF Partners India Fund, the Mauritius Fund 3 and 4, they hold substantial stake. Alibaba, as Nisha mentioned, has sold off, a lot of its holding. In December, it used to hold just over 6%. And then there is SVF India. Now, this is, we're talking SoftBank, right?
Yes, yes.
And again, as you mentioned, we need to wait and see what their approach will be as well.
That's right. But for any company to have two big investors holding so much stake, so therefore Ant Group with 25%, as per SEBI norms, they have technically reached 25% and they need to pay down a slight bit of share to really not, trigger the takeover code of 25%. So as per SEBI norms, it's a very small thing that they'll have to shave off some bit of stake. But in the longer question of whether they want to strategically pare down their stake, that needs to be seen. And SoftBank also with 13% stake.
Sure.
Now, both of them put together have about 38% stake.
Okay.
So, it becomes a very good scenario if investors want to sell and somebody is looking at a buyout, because these are the investors who need to be reached out and they have huge chunks of stake which can be bought over. So it would be very interesting to see, because they will actually be the key players in this, with founders having much lesser say and stake in this particular company. But very few have the kind of balance sheet and money for this larger transaction, because it's a big ticket transaction.
Oh, absolutely. I remember the numbers. When Paytm was listing, it was valued at close to 17 billion. But that's listing. Let's come to the here and now. And with that, Abhishek, I'm going to turn to you. Thank you, Nisha, for explaining sort of the nuances. And I think this is going to be an overhang. Now, I'm going to have my conversation with you, X of these developments, because we need to see if, at some point in time, Bharti comes in, someone else comes in, whom SoftBank sells to. Let's forget that, Abhishek. Let's talk profits and numbers, right? Now, to be fair, the stock has corrected significantly. I think 1900 plus it listed. Today we're talking 600. But to be fair, the company, at least at the EBITDA level, delivered profitability. And they did that ahead of promise. So, Abhishek, isn't the street enthused with this?
Well, the company has turned EBITDA positive, but that's an adjusted EBITDA positive X of ESOP cost. So, if you take into account the ESOP cost, they are still negative. However, let's not forget that that they have turned positive ahead of their guidance. The guidance was of September 2023 in terms of adjusted EBITDA being positive. However, they have turned positive in Q3 FY23 as well, and they expect to be having free cash flow in next 12 to 18 months as well, is what they have guided in the con call to the investors. So these two factors have actually played out to be a good scenario for Paytm.
So, okay, that's an important caveat that it's adjusted EBITDA. These days, everybody does adjusted EBITDA. Whether you're looking at Zomato, so adjusted EBITDA, everybody tells you when they're turning positive or have turned positive.
I don't know for how long this narrative can really continue.
Adjust for this, adjust for that, and then adjust for that, and then you'll find profits.
And
right?
if you see across these tech companies or the new age companies, the adjusted EBITDA is now positive all of a sudden in Q3 FY23.
That's what I'm saying, I was discussing this with Mangalam the other day. You keep adjusting for things in life, and life eventually looks beautiful, right? But anyway, that's the way, financials stack up. Abhishek, also remind us, from the third quarter, apart from this adjusted EBITDA, what are the other main numbers that you were looking out for, where at least there seems to be some improvement, or investors, the numbers that they should look out for to keep tracking this performance and see if it's really improving?
See, the 31 crore kind of an adjusted EBITDA positive has come in at an eventual contribution profit margin of 50.8%. So, they have to sustain this 51% contribution profit margin to have a small EBITDA positive, which is a big task in itself. So that momentum needs to continue, and that will be seen very closely with respect to whether they are able to hold on to this adjusted EBITDA positivity going ahead as well, and they need to have the contribution profit margin of more than 50% to sustain the same.
That's an important one. At the net profit level, because the X of all the adjustments, net profit, they're still in a loss, there's no net profit. But to be fair, their losses from December of 21, I remember the figure, they were at around 780 crores in December of 21. The net loss has narrowed to just about 400, 450 crores. Are people taking heart from this on the street?
They took heart when you saw the IPO price of 2,150 to below 450. That's a massive wealth destruction that you saw of over 80%, and perhaps the largest wealth destruction from an IPO in the history of stock market. That's what we saw. Now they are actually lowering their losses, and you are seeing the stock recover from the lows of around 430, 440 is what I remember. That were the lows. From there, it has bounced back to 600. And if you take a look, the most bearish analyst on street, Macquarie, they have turned positive. So their target price was 450, and they had an underperformance rating right from day one of the listing. They are now positive. They have double upgraded the stock to outperformance, and they have increased their target price to 800 from 450.
And they're not even factoring in yet some sort of a major strategic, investor coming in, or strategic shareholder coming in.
But as of now, the founder as well as the management is really resisting any chance of any transaction where the management control can be given up.
That's an
so
important point.
it's going to be very, very, crucial for this particular year, because equity markets are going to be volatile. The digital space is finding it difficult. Cash crunch is real. So looking at all these pressure points, how they land up performing and abstaining from this and resisting this till the end of the year will be a major task for the company.
Absolutely,
as well.
because the buyers, some of the names you mentioned, they have deep pockets, right? So let's see how this goes. But Abhishek, before we wrap up, let's do a SWOT. Let's do the strengths or the areas that are working and the weaknesses or the red flags. So tell us what the best strengths for Paytm are if they were to deliver properly. And also just explain this to us. I remember you saying that they have the RBI's approval for this payment aggregator services. How does this business work? What does it bring to the table in terms of revenue?
So the first point is, I'll go with the payments aggregator part. It is a third-party payment solution provider that offers merchant onboarding services. So this eliminates, any need of setting up individual online payment processes and allowing merchants to accept credit card and bank transfers without having to set up the whole merchant account with a bank or a credit card association. So it offers a direct benefit in terms of transfers for any merchants if they at all intend to use the Paytm platform. That's on the merchant business. SWOT analysis, the strength is it has a massive reach. There's no second point.
Yeah.
I've traveled, across the country, even in the remote villages, I've seen Paytm. So it addresses a large market and has a good reach which cannot be taken away. Its weakness is that it has a history of net losses, and that in the near future can continue. They can continue to report net losses in the coming quarters as well. Now, co-lending business model, that's a great opportunity. Even this payment aggregators business, that's a great opportunity for them.
So co-lending along with some of the other larger banks.
Yes.
So they
Co-lending
go
is
to
across-
the last mile basically, because they have the reach. Paytm has the reach.
Yes, they go to the last mile in the remote areas or in the areas where the bank is not present. They do that servicing. So a threat is like there is very low entry barrier. Anyone today, you take a look at UPI and RuPay, how they have disrupted the market. So there is very low entry barrier. Any financial entity which intends to come in, let's say for example, any of the Geo Financial or any large conglomerate, if they offer this kind of service, the entry barrier is really very low, because people tend to switch immediately. If they find a good product, you will immediately switch. So entry barrier is low, and then banks are also setting up their own digital platforms. HDFC Bank, for example, or ICICI, their digital penetration is increasing quarter after quarter. So that penetration, that can actually give you a lot of competition if you are Paytm. That's on the threat side, and the route towards profitability, the net profit, that remains unknown.
Yeah, where losses are reducing, but we need to see the black on the bottom line. We're waiting for that. Thank you very much, both of you, Abhishek and Nisha. I think this is a very interesting story. It will keep evolving over the coming few days and weeks and months, and we'll, of course, keep tracking it. So thank you very much for watching this edition of Who Moved the Market. Today it was Paytm. Tomorrow it could be any other stock, company or sector. Keep sending us your feedback, comments and queries, and we'll keep taking up more interesting conversations every day right here at 2 p.m. on CNBC-TV18 News.